2026, I'm not sure. I think I have very strong feelings that it will probably be a super cycle.
Of the bank CEOs that I've met with here, most of them are actually very into crypto. They're starting to integrate it. I met with one of the top 10 global banks in the world yesterday, and the CEO told me, crypto is my number one priority. We view that this is existential.
For most crypto investors right now, 2026 doesn't feel like a bull market year. It feels distant, uncertain, almost too optimistic to take seriously. Price action is choppy, headlines are mixed, and retail sentiment is still cautious, if not outright skeptical. But here's the disconnect most people aren't paying attention to. While retail remains unsure, the people with the most data, the deepest liquidity, and the closest access to policy and capital flows are quietly saying the opposite. Former Binance CEO Changpeng Zhao believes 2026 could mark a Bitcoin supercycle, not just another part of the 4-year rally, but a structural shift in how crypto moves forever. At the same time, Coinbase CEO Brian Armstrong is sitting across the table from some of the largest bank CEOs on Earth and hearing something extraordinary. They're not asking if crypto matters anymore. They're asking how fast they can integrate, because for them, this is existential. And today, we're going to connect those dots. Because while most investors are watching red candles, a $7 trillion global bank is quietly preparing to offer Bitcoin and crypto exposure to its wealthiest clients. By the end of this video, you'll understand why the people who move markets are positioning for 2026 now, and why the noise in the charts may be hiding something much bigger underneath the surface. If you find value in calm, signal-driven crypto analysis like this, make sure to like the video, subscribe to the channel, and let's get into it. Thanks for being here, and hope you enjoy the video.
Do you trade a lot of crypto these days?
No, I don't trade
at all.
I don't trade. I hold Bitcoins. I hold BNB.
Okay.
I don't do day trading. I don't buy and sell. I don't try to time the market. I'm just not good at that. Years ago, like 10, 20 years ago, I tried that, lost money. Just figured, I'm a developer. I build systems. I don't trade.
So do you have any thought, though, real quick, on just like the price of Bitcoin and where this is all headed? Do you think we're in a winter, a summer cycle? Are you with Cathie Wood, who thinks it's going to turn into $1 million a coin?
So whenever people ask that question, I always got to ask them, what's the time frame you're looking at? If you're looking at today, tomorrow, or a daily basis, there's no way I can predict. If you look at a 5-10-year horizon, it's very easy to predict. We're going to go up. If you look at a 1-year horizon, which is like what the most sort of common right. Framework is, 2026, I'm not sure. I think I have very strong feelings that it will probably be a super cycle.
Be a super cycle? 2026,
yeah.
For Bitcoin?
For Bitcoin.
And what super cycle to you means what?
Well, normally Bitcoin follows 4-year cycles historically. If you look at historic data, like every 4 years, there's a all-time high and then there's a drop. But I think this year, given the U.S. being so pro-crypto and every other country is kind of following, I do think we will see this. We will probably break the 4-year
right.
cycle. Yeah.
What CZ is saying here is easy to miss if you're listening for price calls, but that's exactly why it matters. He isn't talking about day trading, and he's not attempting to time tops or bottoms. He's also not reacting to short-term volatility, market noise, or the latest macro headline. Instead, CZ is talking about something much more important: timeframes. Historically, Bitcoin has moved in fairly predictable 4-year cycles. A halving event tightens supply, capital flows in, price expands, speculation overheats, and a correction follows before the process resets. That pattern has held remarkably well for over a decade. But CZ is suggesting that this cycle may not behave like the ones before it. Not because Bitcoin suddenly becomes more volatile, but because the cycle itself may be breaking. A true supercycle doesn't mean prices simply go up faster or higher in a shorter period of time. It means the old rules stop applying altogether. In Bitcoin's case, that would imply price discovery driven less by retail speculation and momentum trading, and more by sustained institutional demand, sovereign-level capital flows, regulatory clarity, and a global monetary backdrop that increasingly pushes capital out of fiat systems and into scarce, neutral assets. In that environment, Bitcoin doesn't spike and crash the way it has in the past. Instead, it reprices. That's how you move from sub-$90,000 Bitcoin toward $200,000, $300,000, and potentially beyond. Not overnight, not without volatility, but because the structure of demand fundamentally changes beneath the market. And this is the most important point CZ is making. A supercycle doesn't require hype. It requires infrastructure, custody, regulation, liquidity, settlement, institutional access. And that infrastructure is being built right now.
Just looking at it objectively, the Biden administration really tried to unlawfully kill this industry in America, but from my point of view. And Donald J. Trump, you got to give him credit. I mean, he campaigned on this idea of making the United States the crypto capital of the world. He's kept his promises. He's leaned in and tried to get clear rules and regulations passed so that American companies can thrive, American consumers can earn more money on their money. And he understands also it's an important political issue. There's a huge base there's like 52 million Americans who've used crypto now.
Right.
And they want to see clear rules. They want to see this, get better financial services in the United States. It's also, frankly, a global competitiveness issue, right? I mean, China just announced that they're going to pay interest on their central bank digital currency. Some of the largest stablecoin issuers are still offshore. He wants to repatriate that capital and bring it into the U.S. Of the bank CEOs that I've met with here, most of them are actually very into crypto. They're starting to integrate it. I met with one of the top 10 global banks in the world yesterday, and the CEO told me, crypto is my number one priority. We view that this is existential. We're all in. We're going to put all.
Why is it existential for them? Why do you think?
They're seeing it's like when the internet came around, and you had Amazon competing with Barnes & Noble, or you had blogs competing with New York Times in print, right?
Yes.
And so anytime, there's always change happening in the world, and you can think of it as an opportunity or you can think of it as a threat and bury your head in the sand and pretend it's not happening. But the reality is that crypto is massive. Like something like 500 million people have used it globally. Bitcoin was the best performing asset class of the last decade. The largest financial institutions of the world are now integrating this. And so at this point, I think it's foolish to pretend that this isn't happening.
Yeah.
And we also, by the way, have the Genius Act for the stablecoin bill is now passed into law. So we're not going to undo that. That is the law of the land. There's always been this balance between, do people want to put their money in money markets or do they want to put it as bank deposits? I think that is not, this crypto is not really new in that dimension. Like it's just another flavor of this happening. And there's been a lot of hand wringing about, this is going to destroy all the lending market. And I don't think that's true. Like money markets are already trillions of dollars and there's high yield checking accounts.
But these banks haven't had to deal with a disruptive competitor, a technology competitor who's really good at what they're doing. So they're a little bit nervous about their franchise. Yeah. Is my interpretation, am I correct?
Some of them are nervous. Some of them are leaning into it as an opportunity. I think the latter, we want everyone to win here. Yeah. And I think that's what, I don't speak for the president, but my interpretation of his comments is that he wants all American businesses to win. There is a win-win outcome here. But if someone, is going to try to undermine his legislation that just got passed in Genius, he'd probably. Is
that what's happening now? The banks are trying to retrade the deal?
I don't want to I'm going to be careful here. I think there's the bank trade groups, which I believe are trying to undo the Genius Act.
Got it.
It just got passed into law 4 months ago. And for us, that's a red line. I've talked to many others in the industry that for them, that's a red line. I think we have to accept that that's law and that's going to continue to exist. But that doesn't mean banks and crypto companies can both win in this new world.
Which crypto projects do you find the most fascinating right now? The BitTensor one, some of these ones that are popping up that are actually providing technological solutions to problems, distributed computing, et cetera. I find those fascinating.
They are. I mean, people are trying to tokenize data centers and oil reserves. I think the biggest trends happening in crypto right now is, number one, it's the everything exchange. So it's not just crypto you can trade. You're getting equities, are increasingly getting closer to being able to trade on chain. Prediction markets are really...
You have a partner for that, right?
Yeah. We're working with Kalshi currently.
Kalshi, yeah.
Yeah, the biggest trends are all assets are coming on chain for trading. Prediction markets are growing like crazy, and stablecoin payments are growing like crazy. Those are probably the three biggest trends in crypto right now.
For decades, banks could afford to dismiss disruptive technologies until suddenly they couldn't. The internet didn't eliminate finance, but it completely rewired who controlled distribution, settlement, and customer relationships. Crypto is now doing the same thing to money itself. Banks are beginning to understand that stablecoins threaten traditional deposits, on-chain settlement threatens legacy payment rails, and crypto-native platforms can move faster and scale more efficiently than traditional systems ever could. This shift isn't ideological, it's competitive. That's why Armstrong's conversations with major financial institutions matter so much. When a CEO of a top 10 global bank says crypto is their #1 strategic priority, they aren't speculating on price. They're reallocating resources, reshaping internal teams, and preparing infrastructure. UBS, the world's largest wealth manager, overseeing more than $5 trillion in assets, is quietly preparing a Bitcoin and Ethereum trading pilot for its private banking clients. This isn't a flashy announcement or a retail-facing rollout. It's deliberate, controlled, and institutional by design. UBS isn't rushing into crypto markets. They're methodically testing custody solutions, compliance frameworks, and operational infrastructure first. That's how serious capital moves. Even more revealing was CEO Sergio Ermoti's comment at Davos, where he stated plainly that blockchain is the future of traditional banking. That isn't a crypto advocate talking. That's the head of a systemically important global bank, acknowledging that convergence is no longer optional. This is how supercycles are built, not through noise or speculation, but through alignment.
This is really an important priority not only for President Trump, but for Republicans here in the House, where we've worked for 4 years on market structure legislation, and we've passed it twice. We passed it in the last Congress, my bill called Fit 21, and then this Congress, just last July, we passed the Clarity Act, which is what the Senate is debating. And the Clarity Act got 78 Democratic votes here in the House. We lay out the strict rules for market structure on how to treat a digital asset as a commodity or as a security, how you store it, how you can custody it, how it can be used for collateral, how banks will interact with digital assets. So it's a very important bill. You cannot pass a bill just for dollar-backed stablecoins like the Genius Act that President Trump signed into law last year without market structure. It's like passing a bill authorizing cell phones, but there's no cell towers. So this bill is very important. I agree with the president that I hope he can sign it soon. We're working with senators to get this text in good shape, listening to their ideas, their concerns, their changes they'd like to make, so that we can get a bill that the digital asset community and the traditional finance community can both support and get this on the president's desk.
For years, regulation was the single biggest overhang on the crypto market. It created uncertainty, discouraged institutions, and kept capital on the sidelines. Now, regulation is starting to do the opposite. Market structure legislation, not just stablecoin rules but comprehensive frameworks, is what allows banks to custody digital assets, institutions to deploy capital at scale, and markets to grow without systemic risk. French Hill's comments make it clear that this process is no longer theoretical. The framework exists, the votes exist, and President Trump has a clear incentive to sign it. That removes uncertainty, and uncertainty is what capital fears more than volatility. At the same time that regulatory clarity is taking shape, market infrastructure is expanding rapidly. The SEC has now allowed Nasdaq to remove position limits on Bitcoin and Ethereum ETF options. This isn't retail speculation driving momentum. It's institutional derivatives liquidity entering the market at scale. It enables deeper hedging, larger and more sophisticated positioning, and more efficient price discovery across the entire ecosystem. This is how Bitcoin transitions from a speculative risk asset into a core portfolio allocation. When you zoom out past the daily candles and the fear-driven headlines, a very different picture comes into focus. Industry leaders remain constructive, banks are integrating, regulation is aligning, and the market's underlying plumbing is expanding in ways it never has before. That doesn't mean price action will move in a straight line. It never does, but it does mean the foundation for something much larger is being laid. 2026 doesn't require hype, it requires patience. And if CZ is right, if this truly is a supercycle, the hardest part won't be timing the top. It will be maintaining conviction while the market does everything it can to shake you out. If you value signal over noise, fundamentals over fear, and positioning over prediction, you're in the right place. If this video helped clarify the bigger picture, please hit the like button, subscribe to the channel, and turn on notifications. I'll continue bringing you the most important crypto, macro, and global financial developments, clearly, honestly, and without unnecessary hype. Thanks for watching. I'll see you in the next one.